Hello everybody, welcome back. This is my backtesting episode number 2, and in this episode, in this type of series, I will be just backtesting the PO3 in different times and different dates. As you can see right here, we are on Tuesday, the 4th of February of 2025. Now let's start things off. Now, how do we start this off actually? Well, if you have seen my market maker model video, we usually go to the daily time frame, so we scale down. All right, so in the daily time frame, as you can see, price has already wait, let me actually move because this is on the way. So let me well, I can't move it. Wait a second. I got this right here. And yeah, unfortunately, I can't move it. Well, it was my favorite stuff, my favorite graph things and stuff. But okay, yeah, so I can't move it yet. So we're in the daily time frame right here, and we can see that price sweep this high and then started inversing from this black candle. But then we have this low that we can still be targeting. Now, what has price touched? Also, price has also touched this volume imbalance, right? This daily volume imbalance, which can be a really fun indicator to indicate us that a market maker sell model is going to be happening. And as you can see, price swept the high and it then created the changes to delivery, but failed to create the market structure shift, which can be a really good indicator that the buy model is actually still in place and can still happen, because we also tapped into this 4-hour for value gap, as you can see right here. Now let's scale down to the 1 hour, and you can see in the 1 hour we are looking a little bit bearish from Asia session and then London accumulated. Therefore, I expect New York to either go up or go down, sweep. I preferably go down, sweep these two lows, and then come back up and take that high. Because that's ideal, as although we tapped into this volume imbalance, right, and we are at the top, I still believe that we are still bullish, just because of how this bullish hourly market just because we're on this bullish curve, as you can see on the market maker model, we're on the bullish curve. Therefore, my bias is going to be bullish. And let's check in the 15-minute. 15-minute is always is as well looking bullish. Therefore, it's a confirmation. Right, now let's see what happens. I'm going to switch 15-minute. Now let's see. All right, so it actually happened the other way. So now this is actually good, because we have this for value gap right here below that price can manipulate into, right? And when price manipulates, I want to target either the high, or if we sweep this high, I want to see a quick reaction continuing the sweep of the high, because if it rejects, it can be a strong rejection. Therefore, I'm not going to be trading, because it's going to be against my model and against my bias. Now let's check if we get that tap into the fair value. Oh, okay, so we got a tap. So we got a tap right here above, which is a little unfortunate, because now I want to see price drive, because if it rejects like this, I won't be taking a trade this day. All right, so price kept continuing, which is what we want, but still no manipulation, as I'm still waiting. But the open of the candle just happened right here, so maybe a manipulation down could be good. All right, here we go. This can form a big bottom wick, which can be good, but since I'm trading in this instant, and as you can see on the daily, our point of liquidity is way above right here on the 1 hour as well. It's way above when we have all of these resistance. If I were to take a trade right here, because I still don't know, if I were to take a trade, I would just be taking this high, right? Just because it's a New York high, it's still protected, it's still very good. And now what we want to enter to verify things, we want to see this inverse happen and this change in the state of delivery happening right here, so we can trade this setup. All right, showing resistance. Not feeling it. Let's check ES. All right, ES is also delivering down as Nasdaq is as well. Do we have if a value gap below? Yes, we do. It can be a good indicator as well because we also have this fair value gap, so price could still inverse off of these, preferably the first one because it has more volume. However, if we go into our GAN box right here, we can see that it touched the 50%, which is basically it touched the discount. Therefore, it can be a pretty strong reversal point as well. But now, what am I looking forward to? I'm looking forward to have that change in steady delivery right there, and also the inverse of this big gap. Now let's see if we have that. If we don't have that, if we just continue if we just keep continuing going down, I will not be taking a trade just because of how late it is already. Now let's see what happens. And we get that change. We got that change in steady delivery by a little dot. And that is enough for us to be taking on a trade. Now, let's recap a little bit. We are on the, let me actually put on the 1 hour. We are on the market maker buy model, right? Market maker buy model because of the curve. We have no point of liquidity besides this point above. So we now go in the 1 minute. On the 1 minute, what do we have? What can we use as our accumulation? All of this is our accumulation. Therefore, this is going to be the accumulation high. Therefore, our target, right? Because as I previously mentioned, let me actually put this here. This is a whole functioning accumulation part, right? And then this right here below. What is this right here below? This is the manipulation phase, and we just got the inverse and the change at the same time. So let's see if we now can take this trade and if it's going to be a win. Now, where is the stop loss going to be at and the break even going to be at? So the take profit is going to be all the way above, and the stop loss for me especially is going to be the low, just because of the low of the candle, right? Basically the open high low close, or the open low high close. In this example, it started low, therefore our stop loss is going to be at the low of the candle, entry right there, and then take profit all the way above, now right here. Now, what can we use as our break even? So personally, I would go with this wick just because this signifies a strong rejection. Therefore, price could still inverse off this pretty quickly, and I don't trust that wick a lot. So if we can break this wick with impulsiveness, I will be very confident on this trade. I know some traders like to put their stop losses right here, but I truly wouldn't recommend. And you can either, because this is like a little risk reward positive, you can either put your stops at the wick low, right, which is good, very good, what you should be doing by default. But you can also put your stop losses at the bodies, and you get that extra 1 to 2. For example, on the wick is going to be 1 to 9.5. On the body is going to be 1 to 2, right? Which is basically what you want. 1 to 2 risk reward is the basic stuff. And let's see if we can actually copy trade with this one. Now wait a second. How can I actually enter? Just because this thing changed, I think. This thing got a new update, and now I don't know how to right here, order. Weird. It placed all the way right. Before it used to be above, and now it's below, so it's a little all right, but now let's see what happens if we get stopped out. All right, so we get a huge rejection down, impulsive up, still the down, and then there you go. We can set our break even. We got the impulsiveness, basically touch that break even point, and if we get that rejection of the break even, I will truly be confident that this was a good trade, just because our break even was good. So if you get a good break even, and for example, bad break evens are when you just set break even just because you are big in profit and you don't want to lose. For example, you're just starting being in profit and you put break even, and then you get tapped into your entry back again, right? And then you get inversed and exploded back up. That is a really bad break even, just because it was an emotional break even, in contrast to these break evens, because these break evens are specific, pretty good break evens. For example, this, which was a rejection wick, and this rejection wick can signify a lot. So if price starts rejecting from this point, I will be very satisfied, just because I know that I was right on my bias, I was right on my everything, right? And if we get stopped out right here, I would like this to continue going down. So for example, if I get stopped out, I wouldn't like to see this and this, right? Because that would mean that the break even was affected, but there could have been other ways. If we get break even right here, I would just like to see something like this, right? But now let's see, because everything can happen, we can also trade into this change of state delivery zone. Depends if there's accumulation, and if there is, I'm going to snipe, and I'm going to teach you if that happens. You can start to see the rejection as you see, and look, break even. This is simple. You shouldn't be mad. You got to be really happy because I told you so. This break even was going to be our savior. Now let's see if we just get wicked out. And yeah, price recouped after a little bit, and yeah, that is what happened. So in these instances, I would still prefer the break even. And we can see as well, look, another accumulation, manipulation, distribution. We got wicked out just because we got the break even, and then we got a huge displacement downwards. I mean, did not like, of course, because we got wicked out, but I mean, it's still very good just because the break even was on point. As you can see, price rejection from that point, which is really what you want. And in this case, if you are a liquidity sweep trader and inverse, you can just be looking for the liquidity sweep, inverse, and enter back again, or just be entering off the change in state of delivery zone, which would have been right here, which was actually a good trade. But since I don't want to go risky, these trades are very, very risky because you're trading against it. Just because you have that, you have all of this strong movement downwards, relying on a liquidity sweep, and they tap into a change in state of delivery zone, is not going to be that reliable. You know what I mean? But yeah, either way, and you can also see we have a little bit of news. I don't know, man. And now let's go to new day open, which is going to be at 9:30. I think I'm going to do 3 trades, depending if this one takes a long time as well. I don't know. So let's check the daily. We can remove drawings. Let's check the daily. So we ended up tomorrow being bullish, and also we are trading within a range, which is just what we like. Now let's look into the 4 hour. 4 hours is also looking bullish because of the tap into this fair value gap. We tapped into the fair value gap and instantly started reversing, as you can see from this candle. But we are also now trading inside this 4 hour fair value gap. So I'm going to also set a minor sell side liquidity below to target, and also all of these wicks can serve as our targets, right? Now let's move into the 1 hour. So the 1 hour had a little bit of this down pulling towards, as you can see, it's a little yeah, we have relative equal highs above, which is beautiful targets. It is what you like. And you can still see that we are on the buy side curve, right? Because look, we are on the buy side curve just because we have this curve, we have the minor pullback. The minor pullbacks are still going to be happening. They are not signifying that price is reversing, because as you can see, price did not touch any point of reversal, anything that was like important for it to reverse. Maybe this high could have been important reversal, but since we touched it and then started accumulating, it was not signifying strength, therefore it did not reverse. It only caused a slight pullback. So I am still bullish, and we can confirm by going into the 15 minute. The 15 minute is looking a little mixed up, is looking a little bearish, a little bullish as well. But I mean, these 2 candles on the 15 minute will decide everything. If it goes up and rejects, we're going to take the down. And if it goes down and goes and rejects, we're going to take the up. Or if it continues up, we're going to take the up. If it continues down, we're going to trade the down. Now let's see what happens. All right, so we have huge rejections, no 5 minute too, so I'm going to skip. You can see price touched this level. This was a 4 hour high, and then it started not reversing, like caused a slight pullback. Let's see. All right, big candles, big doji candles. So these guys are indecisive. They don't know who's in charge. Like in this case, it's either buyers or sellers, because this is called a doji candle. These guys can't figure out who's winning. They're basically it's a stalemate, right? Which is not what we want, because stalemates are accumulative price action times, which you love to see that. to form the P on the power 3, but you're still missing the O and the 3, right? Basically the A, you're still missing the M and the D. Now let's see. All right, continuing. Do we have any 5 minutes that we can take? No 5 minutes. So what time is it? So at 11 o'clock, if there's no 5 minute, if there's no nothing, I am getting out because this is just a cumulative price action and it is not what we like. So you can see, yeah, I'm getting out just because in these times you should be getting out of the charts. Do something else because as you can see, straight from the open, especially in NQ, as you can see, NASDAQ, openings with NQ, they are either explosive or not explosive. If they're not explosive, like this one caused a big doji candle. This is what you don't like to see. Just because buyers and sellers can't figure out who's in charge, they are both causing a stalemate, which stalemates in NASDAQ, especially on the opening, because it's such a volatile time, is going to be basically fucking up your strategy and basically messing everything up, right? So that is not what we like. NASDAQ, especially NASDAQ, ES can be a little bit different, but especially with NASDAQ, since it has the 100 top performing tech companies from the ES, it usually on the openings is really impulsive, and it is what you like to see. That's why usually guys don't put limits on NASDAQ. They're not a limit trader on NASDAQ. They don't snipe the NASDAQ just because NASDAQ is known for doing, what was it called? It was like shit and run or something like that, or hit and run. Just because when it forms a setup, there's no pulling back. It just explodes to your target or explodes to your stop loss. That's why I love that NASDAQ. It's such a beautiful and volatile price action. Now, we're on Wednesday. Let's go to another day. All right, so as you can see, I can already skip these two. We can go in the daily. Beautiful. So the other day ended up bullish. We actually caused this little bottom tick and then went bullish, targeted this high of the candle and still continued, which is still confirming the bullish market maker model, where we swept this high, did not cause any major reactions off that. We also marked that high over there. We have a lot of 4 hours that we can trade into, therefore we can be trading the sell side despite being in the bullish narrative. We can still be trading the sell side just because of how many curves, how many wicks, how many everything is below. Therefore we can expect a little tap and then explosive back up, just like this day. As you can see, it tapped into the 4 hour and then exploded back up. We can expect the same thing, so we can trade the way down. It's a little bit riskier just because we're not following the model, but I mean, there is always exceptions to the case. Now let's move into the 1 hour. 1 hour looking extremely bullish. Now, I like what I see. As I previously mentioned, I can take the down or I can wait, but waiting on NASDAQ when you lose time. NASDAQ after 9:30, it usually loses volatility, which is not what you like, especially with this mega volatile pair. 15-minute also looking a little bit accumulative, but mostly bullish as well. Now let's see what happens. So 15-minute, do we have any fair value gaps? Nearly, but no. But however, what I can see is that we have a huge rejection of above. Therefore, it could be confirming my market maker sell side model, where it can confirm my bearish narrative to take the low and trade for this 4 hour, but we still have to see because we have this 5 minute that can impose some resistance because the new open of the candle is going to begin right now, right? And immediately tapped into this 5 minute, but we have this point of liquidity below, and I would like to see a sweep of liquidity and then explosion back up. If that doesn't happen, I don't know if I will take this as a trade. All right, we get that sweep to form the bottom tick, and if we can inverse this, as you can see, if we can inverse this gap right here above, if we can create that change, I'm going to be happy and I'm going to take a trade. It inversed, but this is not exceptional PA. This can be a little bit of exhaustion just because we're also trading on February. but I'm still, for the purpose of this video, I'm still going to take this as a trade. This would not be a plus setup. I would wait for a little bit more confirmation, which in this case would be a changes to the delivery tap. But I mean, at this point, just because this is educational purposes, if I take a loss, I will also explain you why I took that loss, so you can actually learn and also avoid these losses, because these are not mistakes, right? These are common errors. They're not mistakes. They're common errors that people and mega big traders still do, and it's just because of also price action and how price is moving currently. Now, what can be our targets? Of course, this will not be our target. 0.75, that's not a real target, let's be real. Now, you can see what is the opening of the candle is actually this, right? So this candle at 10 a.m. from the opening. Therefore, we can grab our standard deviation, the fib tool. We can extend it from the bottom tick up to the opening of the candle, and we can see our levels. Usually, what you like to trade is to the is to the minus 2.5 or minus 2. You usually want to see a 1 to 2. Therefore, I'm going to be trading right here above. Now, what can these levels signify? These levels can signify areas of resistance that price could vary in. For example, when we reach this -1, since it is also within this big high, this big high is going to be our break even, just because of how impactful it is, because it is the highest traded point on New York, especially in the open. So this is going to be a very volatile high. Therefore, price is either going to reject and go down immediately, or it's going to keep accumulating. Why accumulating? Because of this -1. It's going to be creating resistance. Buyers want to push price forward, right? Because they confirm that this break even because they confirm that this high was not a big threat, right? This high is supposed to be a big threat because it's supposed to reverse this as it's a big area of resistance to buyers. But if buyers can break through here, we also have the -1 on the fib, so we can expect a little accumulation, manipulation maybe, and tap us out, fake us out, which could be really sad, and then a distribution upwards, and we can still face the same accumulation. Now, that is standard deviation, and that is the most beautiful thing that you should be learning. I'm going to post a video next week about that, of the standard deviation, which is actually a really important concept that you guys should be trading as well. Now, let's see if we can actually win this trade or not. I would not be recommending. I would wait for something just because of how important this setup actually is. But for the sake of this video, I will just be showing you guys. And if I take a loss on this, you will understand my mistake just because of how many minutes I've been talking, right? Now, let's see what happens. Right. Did not touch the break even. There you go. A break even set. Now, what can happen right here? We can see price exploded immediately. This is common NASDAQ. Usually when it forms a setup, which as you can see it form right here. Accumulation right here above. You can see accumulation, right? Manipulation to the 5-minute with the open low high close. Stops at the low, inverse the gap change, and then it exploded back up. Now, what can we expect? We can expect either a strong rejection down, which would mean that which would signify that this high is a very stable high for sellers, right? Therefore, it's going to be pushing buyers down, which in this case is not what we want, because we're on bullish narrative for the daily, 4-hour, 1-hour, 15-minute. It was every bullish. Everything was bullish, and you can see on the -1 standard deviation, this can cause a little bit of accumulation, but I mean, nothing to be worrying about, but I'm just warning you because this is my experience, and if price can break this -1 level without accumulating, it usually signifies that it's going to be straight to my take profit, and maybe even towards this high, just because of how explosive price is right now. Now, let's see if it accumulates or not. Told you. What did I tell you? I told you that when it reached that -1, it's going to be accumulating for a little bit. Now, let's see if this was just a typical accumulation, manipulation, distribution. And if not, we can also take a snipe entry. This is risky, but I also do these. Now let's see if price breaks below this low. If price breaks below this low, I'm going to be considering doing that, and I'm going to explain why and what it is. I mean, I didn't have time to even do anything, but yeah. So you can see I will not be taking a trade right now, of course, because of this huge rejection down. Therefore, this high was a big resistance to buyers, big supportive to sellers, and also the -1 standard deviation did not help as well because it accumulated and it manipulated. Now, what can I also do? I can wait for that tap into that change in state of delivery zone, which, as you can see, it already happened because change in state of delivery, change in state of delivery zone. Now, what can happen? It can go down, but it can go extremely up. That's why I don't like these entries, just because of how risky they are, because this has two outcomes. It is either one or another. It usually does not accumulate. When it taps that change in state of delivery zone, after it touches a impactful break-even / impactful standard deviation zone, it usually does one of two things. It either dumps straight into your stop loss, right? There's like one or two candles into the stop loss, straight going to the stop loss, or it can explode back into profit, which in this narrative, I really would like to see an explosion back up, and I'm going to explain why if that happens, if that so happens. If it doesn't happen, I will tell you why it happened the opposite way, okay? Now let's see what happened. Oh, this was what I was saying. I mean, it did accumulate for a little bit, but then, big rejection candle. Now, why did this happen, and why wouldn't I take this trade? First of all, this is a very risky trade. If you're a risky trader, you can take this. This is a snipe entry. I mean, snipe traders, they usually also have like a 30 or 20% win rate, if I'm not mistaken, but they still are profitable just because of these. But in this case, if I were to be trading this, I will be not taking the setup just because of one indication, this candle. Usually when price touches break-even points such as these ones, these break-even points, they are impactful, yes, and also when combining with the -1 standard deviation, I usually expect a slow climb like this, right? When you see a slow climb, you can set limits instantly because price is either going to explode or go down, right? So if you like to take risks, if you like to take risk for a big reward, you can actually do that and you will be profitable if you keep doing that strategy and if you keep trading that strategy and not be switching up on your strategies. However, in this instance, since it accumulated, right, which is what we want, because it touched the -1 standard deviation and the break-even, as already mentioned multiple times, it did not go down slowly, which is what we want to go in to get that tap into the change state of delivery and go explode back up, right? Because of this candle. This was a big no-no. This was a big rejection for buyers because this indicates that sellers are actually running because they actually had reinforcements, let's call, up in these highs, which basically in this narrative, in this bullish narrative, is never what we like, right? And also we can see pretty stopped out with one candle. I told you, one or two candles. We accumulated a little bit. It gave out some hope and then shitted you right in the ass. It is basically what it is. That is NASDAQ price action, pure NASDAQ price action. That's why I love this. Man, I love this pair so much because it's so interesting, it's so volatile, and every single time I backtest, every single time I trade this, I get so fascinated just because of how quickly things move with NASDAQ especially. And yeah, that is the end of the video. I hope you guys enjoyed this video. Man, my cough. I hope you guys enjoyed this video, and let me know in the comments down below if you want to see more videos like these, because this is my second video, if I believe. I don't know. But yeah, if you like more videos like these, like this, these are like a little longer videos and stuff. This one will be like 30 minutes long. If you like these types of videos, I mean, just comment down below. And I hope you have a great night, and God bless you.